All right. Yeah, firstly, thank you everyone for joining. Today we are talking about building a small account. So usually when people think of trading, uh, most of them think that it deals with like a lot of money and you need to risk a lot of money or put a lot of money in it. But usually you can start trading even with like around $1,000 or even $2,500. Today's session, I'll be covering about what I usually prefer, like how I use the money in a small account, how much amount is small account for me, and what is my style of trading, what are the five different or five particular high setup strategies I use, and I'll show you how usually you can scale trims and how much percentage of money should be invested from your whole account and why discipline and risk management and patience is always key in trading. I'll go ahead and share my screen. Just let me know once you see my screen. You don't see my screen? Oh, thanks. Thanks. So let's start talking about small account. Usually, when you come to trading as a beginner, most of you think what from where to start or what to do. So most of the people try to follow some online journals or people from online and any advertisement post or suggestions from friends, these kind of things. For some people, get into own research, spend like couple of hours and do this. But the thing is, most of the time, what we neglect is we don't calculate our risk. We don't know how much money to put in what position and how actually options are useful to build your account. Buying shares is nothing wrong, but when you buy options, you get some larger scope to take like big profits in less span of time. Owning a shares is kind of owning a part of a company, but owning options is something like you're betting on a play and you're trying to win money by predicting the stock to go up or down, right? So talking about a small account, there's some pros and cons for this. Let's go with pros. So the first thing, if you start with a small account, you need to have a proper risk management. I'll tell you what risk management and how we are going to handle risk in coming slides. But with proper risk management, you can actually cut your losses. I mean, it's not that you lose all the money in your account, but if you start a small account and something comes up, like how the market is behaving currently or if from the past 4 or 5 weeks, you can experience some hurdles while trading. But the thing is, it's not about the good days, but it's about the bad days, right? How we are going to handle your losses. If you have proper risk management, you're not going to lose a lot of money. So the losses are always significant if you are trading with a small account, and you are following a proper risk management. Right? And to start trading, small accounts are always best because even though something happens and the market crashes in 1 or 2 days and you lose all your money, you can really restart again, bringing a small amount of money. But if you start with a larger account and you're a beginner, and if you lose a large amount of money, it will be really difficult for you to again process all the amount and handle the loss you have experienced, right? So once you start trading with a small account and you practice proper risk management and you know how to move the money from here and there, how to take profits from it, how to accept the losses, you'll be ready to lose 200 if you're trading with 2500, right? But if you put 250K and you suddenly lose 20,000 to 30,000, that's a bigger amount. So once you start with 2500 or so and you start trading and you accept some losses and you take good amount of profits, maybe 80-20 ratio, 80% of your trades are wins and 20% are losses, but you can still build your account from 2500 to 4000 or 4000 to 5000, then it keeps going, right? It may be slow, it can be slow because you're using a less amount of money, but once you habituate this and trade with small accounts and you see constant profits with proper discipline and you have a good patience and with proper risk management, it will be easy for you in future to even handle a bigger amount of money, and it will be some, kind of people experience kind of fear to put some money in trading because it always comes with risk. But if you trade with a small account for a particular period of time and you then start trading with a larger account, it will be easy for you to handle the larger account by using the experience you have gained by trading the smaller account, right? And the small account profits are always like appreciative kind. Like once you see money coming in initial days of your trading, like considering you're a person with no trading experience and you want to start trading, you follow me or someone or you do individual trading and you started with a small account. Once you see your money getting increased like 5 or 10%, you appreciate your trading journey. You think the trading can really make money and you'll be some risk free. You're using small money, you are putting small amount of money, you may lose a very small, but you may win very small too. But the one thing which is going to be happening is you will appreciate your trading journey and you'll be getting constant profits. What are the cons of it? You may have seen like many people advertising their gains in the social media or in their respective channels. Like even I post some gains in my Instagram, like you may see me winning like almost 1,500 or 1,000 or sometimes 4 or 5,000 in single position. But in small account, those things won't happen because you can't really expect bigger gains when you are dealing with small amount of money. And also small account takes some time to build, maybe to move from 1,000 to 2,500 or from 1,000 to 2,000. It may take you 2 to 3 months to actually double your money. And it will be easier to blow your account. Suppose if you're trading with $1,000 and there is a small account you're trying to build, and all the money you have put in a single stock is your account size. For suppose if you have bought some NVIDIA calls for next month, you think NVIDIA can go up by next month, and you put all your $1,000 of your account money in NVIDIA. And if NVIDIA bluffs you, it goes in a opposite way, maybe it dumps, your 1,000 will become like 100 or 200. So it will be very easy to blow your account if you're not following proper risk management. So small account trading is useful, but also there are some disadvantages which can be reduced and eliminated if you follow proper plan and accept some risk and analyze some risk management and few things we'll be talking about. Right? First of all, how to grow your small account. So two different strategies or two different styles I recommend you all to use small account is swing trading and day trading. Coming to day trading, there is something like you buy and sell on the same day, right? You buy some contracts on the stocks to play a bet. Like if, for example, if you say Tesla, you come in the morning when market opens at 9:30, you say Tesla is going to maybe go up by next week or so, and you buy some call options. If you see Tesla moving up a bit, you make profit, you come out of it on the same day. That is called day trading. But coming to swing trading, which is my favorite, and we almost do this daily on my Discord, and we are very much profitable from swing trading. We usually do less of day trading because it comes with high risk, and you need to stay onto the screen all the time, and you need to copy my messages and follow them. Maybe unless you're out of the position, you can't come out of my Discord. So based on the work schedules everyone has, and considering everyone is a beginner in my Discord, I usually prefer swing trades because what happens is swing trades, you get into a position today and you wait for maybe 1 or 2 weeks, sometimes even months, for the position to play itself and make some money. So to manage this, we always keep it slow while building the small account. I usually do with swings, which will make it easy for the beginners, right? Yeah. How to use the money in your small account? First of all, in this session, I'm considering 2,500 is the account size. Usually, it can be even less, but I'm going to explain with you considering 2,500. So 2,500 is the small account balance with no trades, no trading experience, and everything. So how are you going to build it, right? So first thing you need to make sure is you're not using more than 20%. 20% of 2,500, which is 500 for a single trade. So out of 2,500, you're putting 500 on a single trade. You eventually get now 5 different trades. So you put 5 different options, be it calls or puts. 5 are different, and you're investing 500 on each trade. So one thing you can observe from here is if you put 20%, not more than 20% on a single trade, even though you start with 2,500, you have five different options, five different trades, and five different scenarios, right? To make money or vice versa, right? But the thing with 20% is what if one of the five trades got blown out, right? Something like 500 on Nvidia has gone to zero on the next day, some bad news on Nvidia or market conditions or something. You will be still left over with 2,000 again to start building your account, right? So if you take 500 for each trade and if you get into five different trades and one trade got blown out, your account size now is 2,000. What you need to do is now divide 2,000 into again 520%, right? Now your trade size will be 400 itself. Now you get into five different trades again. So when you start with a small account, you just make sure that you're not putting in more than 20% on a single trade. In that way, you get into five different trades, right? So once you get into a play putting $500, you see money moving. If it goes into the profits, you sell 70% of your investment, right? That means if you're putting 500, you sell 350 out of it, and you make some profits. And the remaining 30%, or which is $150, you hold for them to see if they're going even higher, or you just stop for whatever price you have got. To make it easy, for suppose from 2,500, you bought $500 of something like, let's consider Nvidia. You put like Nvidia 120 calls for next week, and each contract costs you like $250. You bought two contracts of them, which cost you 250 each. So you put 500 in Nvidia, and you still have 2,000 in your account, right? So I said you sell 70% of your investment at 30 to 40% of profits. If Nvidia goes towards 120, you'll start making money on your call option, right? So once you see profits, you sell one contract and you'll hold the remaining contract. Now you bought two contracts each at $250 value, and by making Nvidia move to the upward direction, your 250 might move to some 320 or 340. So overall, you have made like around 80 to $90 on each contract, but you only sell one contract. By that, you are making like 80 or $90 of profit. And another contract which is valued at some 330 or 340, you're still expecting it to go more. If Nvidia goes more higher, your value may go from 330 to 340, then 380, 400. Then you again take profits. But if it comes in the reverse direction, you bought it for 250, right? If it comes back after taking profits, you need to sell it at 250. What happens is at the initial pump, you take profits on one contract, but if the stocks continue to go, you take profits on second contract too. But if it comes down, you'll sell it at the price you have bought. So that means you have managed your risk. You have to profit on at least one contract. So you have actually made a decision to hold it because you think it may go up. And you're also making sure it won't go down of your buying price. So it's equal ways, like it can go up or down. That's the reason as you trim profit from the first contract, you are holding the second contract for higher profits. And in worst case, just sell it break even, right? That's how you take profits. And coming to risk management, we are playing only 10 or 20% of your money. Most of the time, you put only 10%, which is $250 on plays which you are confident in. If I'm confident on a single play, I'm going to put 10% of my account. If I'm more confident on it, I'll put like 20%, which is $500, right? And stop loss. What is stop loss? If you are losing some amount of money, you're coming out of that trade. Be it whatever it is, if you are putting 500, if you're putting 500 on a single trade, which is 20% of your account, but you said Nvidia is going to 120, but it is not, it is going in the opposite direction, then what you do is you just wait for 100 loss and you come out of it. So you're out of 2,500, you're putting 500, and out of 500, the maximum you're trying to lose is not more than 100. If you lose 100, that means you're coming out of it, which is 20% of your position. And your profit goal should be 20 to 50%. That means here in your small account, you're starting with 2,500 and you're using 500, and your profit goal for each 500 is to make 100 to 250 using them. So as you remember, we are taking five trades in our small account, each valued at 500 and total account being at 2,500, right? If you see, considering four wins and one loss, right? Our loss should be 20%, which is minus $100. Our four wins, which will be a profit of 20%, which is $100. 4 wins will give you $400 and one loss will deduct 100 from your profit. So if you take one trade 500 each of 5 trades, you'll be making at least $300, right? You're starting with 2,500, you're making 300 out of 5 trades. Even after one trade being a loss, you still grown your account by 10 or 12%, right? In this way, you move your account with 5 or 6 trades from 2,500 to 3,000, right? From 3,000, what happens is you increase your account size. Once you reach to 3,000 to 3,500, what you do is you start investing $700 or $750 in single trade, and you again take 5 trades and keep doing it, right? Remember, it's like almost 200 to 220 trading days, removing all weekends and holidays. If you at least aim like $50 per day, you can easily earn $10,000 per year, right? So if you keep repeating this, even 2,000 account is very much enough to make your account into 10,000, and from there to 25,000, there to 100K. It may be practically like be funny to listen this or something, but it is possible with proper risk management and good fundamentals, right? So high probability setups coming to us on our Discord, we use falling wedge pattern, bull flag pattern, head and shoulders, inverse head and shoulders, and bullish engulfing pattern. So I'm not going to teach more of technicals today, but I want you people to understand how I'm going to use these things. So what makes me use this spy is like from the past 4 years when I went to this trading, I learned around 20 high probability setups, right? Out of this 20 high probability setups, I take swings for every 20. And all these 20 probability setups, there is an order for me, like which one is high probability, which one is the lowest, from ranked from 1 to 20. But I take trades for all of them. I have a journal where I maintain a stats like how many swings have taken from falling wedge pattern in 2021. How many of them were loss, how many of them were profit. And after an initial trim, how many runners did good. Same with bull flag pattern. How many swings did I take on the bull flag pattern in 2021 or 2022, 23, 24, 25? So every year at the end, I analyze which pattern has given me good amount of returns, right? So the same strategy, I'll be taking more number of trades with more size in the next year, right? So this was possible when the Trump was like when the don't like Biden was president for last 4 years, right? But when the Trump stepped in, I see the swing patterns or inverse shoulders or engulfing patterns, everything move in a different way because the Trump government has a larger impact with news, tweets, and everything. So you need to sit down and go back to 2016 to 20 and see which kind of patterns played well. As I was not trading in 2016 to 2020, I started trading in 2020. I just did like 6 or 7 months of 2020, and then the government changed, right? So news thing will always affect your trading, but always choose your high probability setups. I choose 20. Out of them, 7 are more profitable, and I rank them 1 to 20. So you always journal them. Like you can do it quarterly, you can do it monthly. But most of the swings you can do yearly because all the swings we take are expiry up to 6 to 8 weeks. So we get into them, wait for 3 or 4 weeks, take an ad, maybe average down, and take profits in like 4 or 5 weeks. So these five on the screen are my favorite because they have been giving me constantly good amount of returns. And on these patterns or on these setups, I'm putting more size and more trades as the years are progressing because they are profitable from past 4 years. So suppose if falling wedge pattern has given you a 95% success rate, why not to choose it for the next trade too, right? So it may fail once or twice, but for me, in last 100 trades, it has been failed only 5 times. So I continue to take all the falling wedge patterns which I see in the market, and especially for the small accounts, right? So next thing, discipline. How is discipline useful to build the small account, right? So here in trading, while trading the small account, discipline is only to risk your money when the setups you wrote down happens, right? I said you I have written 20 strategies or 20 setups. Out of them, 7 are elite, and I have ranking from 1 to 20. If something on the chart shows up the 21st setup, I usually don't take it. So that is my discipline. It's not that whole March month I was not paid. I was not able to find any of the probability setup or anyone of the high probability setup, and I see some 21st different pattern or 22nd pattern, which I know, but I'm not going to take it because what I have written down is just 20 patterns. Of those 20, I only use 7 for small account, and of those 7, 5 are only more profitable, right? So my first thing in discipline is to just look for 5 of those high probability setups. If I find anything from that 5, I'm gonna take this, right? This is the technical analysis. So coming to fundamental analysis. What is fundamental analysis? Once you see something on technical side, you just check fundamental. So if you see a bullish engulfing pattern or a falling wedge pattern, kind of patterns are nothing but kind of diagrams you make from the candles. So whatever way stock is traveling, the candles are printed on the trading view or whatever you use, right? Based on the triangles, you based on the candles, you make some drawings, and those drawing pictures convert into some patterns, right? Those are the patterns you're talking about. Once you see these patterns, for example, if I see a bullish engulfing on Nvidia, that means I'm expecting Nvidia to go up. So how are these patterns created? Nvidia has this movement based on news, people buying stocks. If people buy more stocks, stocks will go up. If they sell, stocks will come down. So this up-down movement happens every 5 minutes, every 1 minute, every day, every year, every month, right? But you have a history of graph. So when certain movements happen because of buying and selling, the stock forms some images or patterns and move in either direction in a big way, right? So this formation is called as patterns, and this moving can be predicted from the patterns, right? So once you see those kind of patterns on any stock, for suppose Nvidia, then you check back how those kind of patterns acted on Nvidia in the history. You just minimize your graph, see if there was any bullish engulfing on the Nvidia in the previous month. If there was there, did it make the movement upwards? Yes. Was the volume included in the movement? You check these kind of things, right? Then you go to Yahoo.com or Yahoo Finance, and you check the income of the company, how much money they are making, how much gross profits they are making, how many sales they are making, how many liquid cash they have. These all are fundamental analysis, right? So you wait for your setups to happen, which are technical analysis. Once you find the setups, you just spend like 10 or 15 minutes on the company or on the stock, how they are doing. If you feel they are doing good, if you see volumes coming up at key levels, you get into swings, right? So in this way, this is called as discipline. And most of the time you'll be profitable because you're following a good setup and you have seen everything. I know things can happen at least 85% of the time, right? 15% it can be an issue with the news or anything or setups failing, right? Otherwise, the only hope you have is the only indicator or the only pattern you have in your mind is just the hope. You buy something, just come in. If you see today the market has been low, you just buy in Tesla or Meta because your best friend said that Tesla is gonna go up. It won't go, right? Someone will tell you you can buy Meta, it will go up, but you really ask them why, they'll say they have read it somewhere, right? If you see what they have read, you can find the same type of news on every stock. If you go into the market or if you ask ChatGPT what stocks to buy, it will just give you a suggestion, right? Even I am giving you a suggestion, but what we do with the small accounts is we follow the history. We look for high probability setups. We know which setups are making good amount of money. That's the reason I will be confident to grow a small account, right? So another thing, patience. So patience is discipline is just to take the setups which you have written down, but patience is to take high probability setups which you have written down and also give them time, right? So what happens is if you get into some stocks, you need some patience, right? If you get into a stock like 2 days before, maybe last Monday you are into a stock and you want it to go up, and your expiry is somewhere in May or June. So May or June is an expiry on option for some reason. That means you can earn or burn your money in the meantime. Right? That means if your option is in negative position right now, you need not panic. You just need to wait for the play to happen. Right? Candles will print, but when they will print, as the days pass, as the stocks move, they will print, so you can make money. Right? Stock market will be open for 6.5 hours, right? From 9:30 to 4 p.m. daily. And good setups can be found only maybe once or twice a day. And even sometimes those won't happen because the fundamentals doesn't look good or stock can experience some volatility. Volatility means a large movement happening, uncertainty, like for the news or the volume or the buying, selling. Usually stocks move in different directions and options can't really make you money if the stock is volatile. You will experience lot of losses. Even the stock is going in the direction you have predicted, your options won't move that much, right? So you wait for the setups to happen. Once you get into the high probability setups with the discipline, you need to practice some patience, right? If you see the market today is like around 560s or something, after a few days it may go to 500. I mean, I'm talking about SPY S&P 500. It may go to 500, right? The same Tesla stock was around 400 like 2 months back. It is trading now lowest. It can go more low. But what happens is all you need to do is you need to find an option expiry. You need to wait for it to happen. If you guys buy a long-term contract for 2027 or 2027 December, you still have a lot of time. But what you need to practice is patience. You need to wait the setup to happen. You are into the stock, you are giving this money, you are putting this hard-earned money to earn profits. So if you are following proper risk, which I said, using only 20% of your account and all the 80% is still with you, you are ready to reach this 20% of your account. You are following the high probability setups with discipline and your setups are written down. You find a good setup, you check the fundamentals, you are okay with it, you are getting a 85% win rate, you come into it. But after all this hard work, if you don't have patience and you come out of it, once you sell it, the stocks will go up and eventually you'll end up getting into a good stock but not making money. So you always need a small account to start with. You need good discipline, you need good patience, you need good risk, right? These three things are important. And trading psychology, right? So mentally, you need to be very confident while you trade, right? You need to assume yourself like a sniper. You can't be a machine gun and shoot like 10 or 15 bullets in 1 second. You can't get 100 or 200 trades in a month. You just need just one cool shot where you're going to put your 20% of your account and make like 30% out of it and grow your account. That's it. For example, if you go to a gym, if you work out daily, eventually you'll make your body into a good shape, maybe after 1 or 2 years. But if you go to the gym for 1 month and you can stop and you're not showing up again, you can't really make progress. So trading is also like a same thing. Like whatever you take in the life, take it like a marathon, right? You keep working towards it. You show up daily. You need to follow some basic rules, right? If you're trading, you need to show some discipline. You need to understand how much money you're putting and where you're putting. You can't really blindly. If you're doing a good 9 to 5 earning like 300K, 400K, you can't throw the money in the Robinhood like maybe 2 or 3 thousand per month and choose random stocks and you can put money there. You will eventually end up losing. You may win, you may win. I wish you win, but without proper trading psychology or discipline or risk, you can't really grow your account. It needs some hard work, but just with small basic principles, you can definitely win it, right? But the results will be seen only if you are not going to give up yourself and if you continue to. Okay, I'll answer it then. Yeah, maybe. Yeah. Just make sure you're taking a marathon route. That means you keep running, jog. You'll reach your goal. You're not doing a 100-meter sprint or anything here for sure because that thing won't do anything. If you get into something in today morning and if you take loss and again you take another trade in the afternoon, again you take loss, you come back tomorrow, you lose 50% of your account gone. Right? That will just ruin your impression on trading and you lose interest to trade. So keep it simple. Follow simple rules 20% at a time, 30-40%, trims profits, use runners, break even stop, risk reward, high probability setups. And discipline is to only wait for the setups, and patience is to get into the setups you have written and wait for them to happen. That's it, right? And to conclude this session, I would say don't only believe Like you can trade with larger accounts, you can trade with small accounts, and that can happen with options. And it definitely can happen with us. We have been doing on our Discord too. We started with like around $1,000 and we are somewhere around 2,300. That account would have gone even up if there was no tariff news and everything. But now we are taking it slow, just one swing at a time, maybe targeting 20-30%, using 400 to $600 and earning just 200 to 250 and moving the account, right? So you need to start small. You need to be staying strategically, and you should never stop learning, because once you make a mistake in trading, it cannot be repeated, because for every mistake you lose some money. For a mistake, if you're losing some money and if you want to repeat the mistake and lose again money, then that's a bad thing. So you make mistakes and you learn from them, and you don't want to repeat them, right? And remember, your small account growth is not difficult. It's easy, but it's not simple. As you do, it will progress into a larger account, and you can really earn some money too, right? That's it for today's session. I'll take these kind of sessions maybe in for future too, but I want you all to share, like I wanted to share you all like how we are going to build the small accounts and what strategies I'm going to use. If you have any questions, you can leave it in the same message box. I'll answer it from here. Yeah. What patterns we should really look at with this whole term tariff thing? We don't know what is this next move is not like. This is the first time it's something to always starting to taking options. So, yeah, taking long options leaps will take more of your capital, but the current market, what the best suggestion I would say is like you need to trade with small accounts and save your capital, because if you give me give me a second, let me share my screen. I'll show you all one thing. Can you all see my screen? Anyone confirm? That's one. Can everyone see my screen? Yes. Okay. Okay. Thanks. So this is pi. I don't know how many of you can understand this, but I'll explain you. So if you see these blue lines, this thing is called bear flag on pi, right? So all these days, each day one candle, because you see here, these are the candles, right? So one day. So each candle is one day, right? So if you want me to be specific, consider this triangle. This price is the starting price of the day, which is 567, and this is the 560 ending price of the day from 9:30 to 4 p.m. So that's how candles print. So each one day there is one candle. If you see this is today's candle, right? Last days like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Last 13 days, SPY was in the bear track. That means this formation is called bear flag. That means you create a pattern like this, and once you come out of it, you fall down. Right? It's like almost $10 more today towards top. This was the reason we were not in more of the swings in our small account. We were just relying on DK and DraftKings, right? So if you take longer picture on this yellow line is 200 MA, which is called 200 days moving average, right? So this is a key level where usually spike and bounce or reject. If you see here, once it touched, it bounced here, right? So same happened here. Once it touched, it reversed. From here, it bounced. So 200 ms are usually can act like resistance and support. So longer picture, Trump government, tariffs and everything. If you see this level, 495, 5022, maybe this level, 490s or 500. To be precise, 479, which is 480. 480 on a SPY is the end of the bear market. How? Because it is going to first check this level, this one, 520. This level. Right here. Because you see here there was a bounce here back in August 24, and there was a bounce here in May, and there was a rejection here in March, right? These 3 points, you can expect SPY to fall up to 520 initially, and maybe up to this level for a bigger bounce, right? So moving forward to buy longer options, you can be specific on few stocks. If you see any stocks like being from like 50 or 60% from all-time highs, you can actually consider those kind of stocks because you can expect some bounces. If you see TTD, this is my current favorite because if you see all-time high on it was like $140 and current stock price is around 55. You are getting it for 50% discount. So in these cases, you check some fundamentals on the stock and you wait for the key levels like this. We are in TTD leaps, right? So on these kind of stocks, it is completely fine to take some longer option calls, which are costly. But if you want to take some leaps or there is long options on Netflix, Tesla, these things can be risky because they hold a larger portion of SPY. And when SPY is falling down, that means market is falling down. Eventually, you lose money. So if you see good fundamentals and technicals on some less famous stocks or less volume stocks, long-term options could be real. But at these times of market, you want SPY to just come back to maybe 480 before you put large amount of money because this is going nowhere. This is going nowhere because if you see there are two support levels here and here, SPY should at least retest this 539 first, then go back, then again come back. But my suggestion, if you are looking for a long term, I would really suggest one thing. If you see SPY coming to 200 MA again, 583 or 585 level, buy some SPY puts maybe for 2026. And once you see SPY going down, you can trim them. But you're not seeing more SPY crossing this 615 unless it is touching 480. That is for sure. Because every time SPY goes up, it will definitely come down. For every bullish market, there is a bearish market. So one thing I would like to show is eventually from 2023 to 25, it's okay. You'll be always upper market. But there are larger dips here. You see this one, this one, this one, this. You'll always see dips. So best thing you can do is buy the dip and sell once it goes up. But you can't risk all your money, like bring 50K or 100K and just put everything in long-term options and pray right now. This is not the correct time to do that, right? AMD, okay, let's check AMD. AMD is a good stock, like you get it for like eventually good price. But the thing with AMD is it is more of volatile. Like a larger movements happen if you see most of these triangle movements up down up down. So for this, if you want to get into AMD, I would say look for this area 92, maybe 94. But you can actually start taking positions from now. In our chart, we took some leaps on AMD for 2027 and we trimmed it last week at this price 114, right? Then eventually it went down. Once it goes to 93 or 94, again we are going to get into some leaps. Once it goes up, we can take this because you can always buy the dip, and for every pump you need to sell it. So that's why we sold. And completely what we are seeing now, April 2nd coming off with some news happening with US, Canada, and all tariffs and everything. So market can still go down. The one suggestion I would give is once you see profits, take them, invest in something. If it's long term, that is fine. But usually what I used to do is 80% of my money were in options and 20% were in stocks. But now I change it to 60% in options and 40% in stocks, right? So try to buy more of stocks if you see any good stocks. AMD is good. You can buy AMD options for 2027 or 2026 ending, maybe 27 January, 110 calls or 115 calls. But when it pumps, you're making money, sell them, and when it dumps, again buy them. You can keep doing that. You can buy AMD, you can buy HOOD. Hood is also a good stock. This thing This thing is really good. Like they are attached to some AI and they are doing some Bitcoin news, crypto news, and everything is in Robinhood. So Robinhood markets can just not stay at 41. If it falls, keep adding more. That is what I can say. Food is good, TTD is good, and AMD is good. You can buy any of this. Anyone has any questions, can post, or else I'll end this session. Okay. All right. I'll end this session. We'll see again when we can meet again for the next session. Thank you all. If you have any doubts, you can reach me out on my Instagram. Thanks, you all. Have a nice weekend.